Hello, it is Monday, the 5th of August, and what a night it has been. Really quite nasty moves across the board. So if you are looking at your portfolio today and pretty depressed, I sympathize. We have been through these cycles many times before in crypto, and it's never pleasant. I do think, though, if you have held through everything that's been going on, and let's face it, in Bitcoin at least, we've been in a really nasty, choppy trading range since March. But if you've decided since then to hold on, I really can say strongly don't. Selling the lows, giving up now, whilst the sentiment is so bad, would be actually not a clever idea. I do think that we are going to see a bounce. Very often these really strong moves in Asian trading will quite often see a bounce, not necessarily a reversal, but they will pause in US trading, and that's what I'm thinking. It's Bitcoin particularly very often will spike beyond levels and spike below levels and bounce back up again, but there's no getting around it. This is the worst week for Bitcoin since the FTX collapse, and we remember then from the FTX collapse that it got very spiky and we did overshoot levels. And if you are easy on the leverage and look away, breathe, you can ride it out this time again as well. So let's talk about that's going on, because all of the traditional media this morning is all full about how this is a fear of a US recession and all this rubbish. It's rubbish. Nothing has changed in the last month. The Fed haven't done anything. Most central banks around the world have been really calm, apart from one. There is one central bank, the Bank of Japan, that decided after 30 years of quantitative easing and currency, keeping our rates artificially low, on July the 11th, the Bank of Japan decided to go into a hiking cycle. And I don't know if you've been around for a while, and anybody who's been around for the credit crunch will remember after the credit crunch, the Fed did the same, instituted quantitative easing, kept rates artificially low. And then when Janet Yellen decided to go back into a hiking cycle again, or stop it, she prepared the market really well. Many times she didn't want any kind of really nasty moves, which is what we have seen since the Bank of Japan. But in Japan, they had a new central bank governor, and on July the 11th, not only did they decide to end this long period of artificially negative interest rates, but he said if everything goes to plan, he's going to keep hiking rates. And for the longest time, there has been this thing called a carry trade. And if you're not familiar with a carry trade, it basically, big banks, institutions, pretty much everybody borrows in the currency with the lowest yield. So in other words, you borrow where interest rates are lowest because it's cheapest, which for 30 years has been Japan, and you invest in the highest yielding currency or the best return. Now, some people do this trade really kind of simply, they just take that interest, and there are some, just like in every market, there are some super leveraged players that use that money that they have borrowed to do super leveraged trades. So what we are seeing is the Bank of Japan, really low interest rates start to go up again, so that that gap between them and the highest rates is changing, and we are seeing the Fed and the rest of the world start to talk about cutting rates. In fact, some central banks have started cutting rates. So that big gap between the low rates in Japan and the rest of the world is shrinking. And so those trades are all being unwound. How big is that carry trade? According to Zero Hedge, it's $20 trillion. 20 trillion. Now, is that all going to be completely unwound? No, but quite a lot of it is going to be. And everybody, let's be honest, everybody was doing it. Even Warren Buffett, a year ago, when he invested in Japan, when we had inflation in the rest of the world, it was like pouring rocket fuel on these carry trades, because the yen got weaker and weaker and weaker. The difference got bigger and bigger. Even now, Japanese interest rates are still on the floor. They're almost zero. And the US interest rate is still 5.5%. So you can make 5.5% without investing in anything. So it was basically free money. It's this massive 20 trillion free money trade is being unwound. Now, we can argue about whether it's really 20 trillion or not. We can argue about whether we're maybe having a recession or whether the Fed matter. I really don't think any of it matters, except at the moment this trade is happening and it's accelerating. And if you look at any chart, we can see since July the 11th, when the Bank of Japan surprised everybody, this has been the move and it's been accelerating. And some people had it right. And we saw it, we saw some quite weird divergences in the market. For example, the Russell went up while tech stocks and the Nasdaq were going down. Why was that? I thought, well, it just must, initially I thought, it must be rebalancing. I didn't realize how big the trade was where people shorted the Russell and were long the Nasdaq. And so really all of these moves that we have seen since July the 11th, I think a lot of them have been nothing to do with the economy or whether the Fed are going to cut rates soon or anything else. It's all been about unwinding these trades. And when these trades get moving and they get really nasty, as we saw in the credit crunch, you don't just sell what you want to sell, you sell what you can. Last night, for example, they closed the stock exchange in Korea, and people were saying, well, they were selling Bitcoin because they couldn't sell anything else. Everything else was closed. And there were some really, really pretty ugly moves last night. I don't think I've seen moves like this since the credit crunch in 2008. And one thing I learned then, and anyone who was around then will tell you, bear market bounces can be really fierce and strong. They can make you think that it's all over and we're going up again and everything's fine. And I have to tell you that if we're going to unwind a 20 million trade, the direction of travel going forward is clear. The rest of the world are cutting rates and Japan are hiking rates. Now, with this move, the Bank of Japan don't like really sudden moves. So they are going to intervene and step in a moment. We'll talk about that because we really need, even if you're trading just Bitcoin or ETH, you kind of need to keep an eye on the dollar yen chart because that's like ground zero for everything that's going on in these markets. And if the Bank of Japan intervene, that will cause pretty sudden moves. So we'll take a look at that. But that's kind of where we are, and that's what's going on. And everybody was doing this, right? Warren Buffett, a year ago, invested in Japanese trading companies and funded it by issuing bonds denominated in the yen at almost zero rates. And of course now that's moving. He has to unwind that trade. It was a really, really big, really good, really brilliant trade, but everybody was doing it. There was a lot of talk that the nasty unwinds that we have seen over the last week in crypto have been because of Jump Trading, which is a huge Chicago trading house. It's not weird at all that Jump Trading were borrowing in yen to fund their investments in crypto, and they're selling them. And until that unwind is over, then it's quite possible that we have more to come and they're going to keep unwinding. And one thing I will point out is if this is about interest rate differentials driving these moves, then the Fed cutting rates in September is only going to make this worse. In fact, it would be a good idea if the Fed paused a bit and Japan paused a little bit on their hiking so that this unwind, which is going to happen, happens a little bit slower. So that's where we are. We are at the start of a pretty nasty unwind, and I think we will see some pretty big spiky bounces. But do I think this is over yet? I'm not sure that it is. No, it might be for crypto, when the leveraged players that were borrowing or doing this carry trade are out and have unwound in crypto, then I think crypto could find a bottom. Do I think anything in the bigger world macro picture has changed? Listen, we had war in Ukraine, huge inflation, oil prices nutty, and that didn't change the picture in stock indexes. We've got, really nasty tension in the Middle East that could spike energy prices again. That didn't trigger the stock market. No, I don't think anything. This is really about the unwind of this bigger trade, I think. So let's look at the ground zero chart at the moment, which is the dollar yen. Let's go to a monthly chart of this dollar. Let's tidy up here and go to this dollar yen chart. Now, when we look at this dollar yen chart, one thing that this is when I talk about the rocket fuel. So basically, January 2023, we went from around 130 in dollar yen to 160. That's a really huge move. Everything was pushing, and we saw a really big move, really from 100 to 160, in a very short period of time, from 2021 to here we are in 3 years. So all of this fueled the trade, and now we're getting this really sharp unwind. What caused these previous moves? This was at around 150, 160, 152. This was the Bank of Japan intervening. So the market kind of saw this as one of those levels that they would intervene at. When we went above it, everybody continued to pile into this carry trade, thinking that the yen would get weaker and weaker, and here we are underneath it, and we're being unwound very quickly. Now, as you know, when a market makes a big five-wave move, which I think we did here in this dollar yen, and we can see these lower moves also unwinding in 5 moves. This previous wave 4 didn't hold a support, and this big double top, double bottom didn't hold a support last week at 152. We're back underneath it. And it means this bigger wave 4 swing low around 140 potentially is the next support. I think that we are also potentially coming into some support. I'm going to zoom out, go all the way back to the lows that we made in 2011. And as you know, I lean on that 236 fib quite a lot. And if I do that here in the dollar yen, so all the way back to October 2011, we can see that this 236 fib comes in right where we are now. Now, for me, it's a big deal kind of touchstone level. The first time back to it, you usually bounce, I have to say, in most markets. So we have reached, now, again, I'm going to say this, I don't think this is the bottom. So we've got this 141, this previous swing low around 140.30. And then we've got 141.58 in this zone. I do think is the first place we're going to see a bear market bounce. Now, do I think this is the bottom and it's all over and they're going even if the Bank of Japan intervene here, I don't think that they're going to change the direction of travel. The fact is that around the world rates are coming down again, and in the yen the rates are going up again, and that huge carry trade imbalance is disappearing. And so this will continue to unwind, but I do think that we could see a pretty decent bounce here. And what very often happens, the yen makes this pattern a lot, is a big head and shoulders pattern. I wouldn't be surprised if they intervene and everything's we could, again, bear market rallies can be fierce. I think we could see even a big head and shoulders pattern here in the end, but this is the level to watch. So let's be clear though, if these support don't hold, if it gets really 2008 like, then and we get stuck underneath here, The next support level is this much bigger swing low and the weekly 200 moving average, which in the dollar yen has previously been really strong support and resistance down at 129, 128.99. That's where the next support is if this level doesn't hold. But this is one of those levels, previous swing low. It's one of those levels where you would expect a reaction. So for now, as we head into the open, it might just be a shallow bounce. It might just be a pause and we breathe out. But again, that's what I'm looking at. So if that happens here, then how will that help other markets? If I look at the yen, which is the other one, kind of ground zero market, this is the Nikkei 225. Let's go out to the monthly on this, because we are at a pretty interesting support and resistance level in this one, in that was the previous swing highs from 2021 and a big swing low in October last year. This is the Fed pivot level when the Fed started talking about cutting rates, and we saw a big bullish reversal. Sorry, I don't know, my neighbour's car alarm goes off, sorry. So, potentially, this is also the weekly 200 moving average. Potentially then, around this level, around this 30,000 level, we have got a little bit of a tail and a bounce going off in the Nikkei already. If we look at this on the hourly, I think if we double bottom here on an hourly, or make a higher low, or some kind of bottoming pattern, if we overshoot it a bit, it might end up being a little bit of the head and shoulders pattern is what you tend to make if you kind of overshoot a level. So we might see something like this. I think a little bit of a bottoming pattern here, and we could see again, it's a bear market bounce. We're underneath the daily 200 moving average, and not clear that we have, you know, bottomed yet, or that, again, I'm not sure at all that this is over. And I think that we are going to get into a little bit of a sell in terms of stock, Japanese assets, as long as these trends continue. I'm not sure that this is over yet. So that's what I'm going to. So let's talk then about Bitcoin. If we look at Bitcoin futures, and we look at, I've got fib retrace levels from the low that we made in November 2022 in these futures. Now for me, this 236 fib on the weekly, we got a bit messy around here, but the first time we attacked it, we had a pretty decent bounce. It was like a 50% bounce here, and that was 60,000. So for me, it validated these fibs that I've drawn from this low to high. And here we have got to the next level, having got underneath in the last week. We dropped underneath this 60,000 support, and now we have dropped down to the next fib support level here, which is at 51,690. Now, I was kind of looking at this as an equal measured move thing, which would be quite bullish. I measured the first swing and this last swing here. You can see this is a chop. That means that if we bounce from here and we close back above 53,320, that would be a little bit more bullish, and I think that we could then see a back test of 60,000. So let's be very clear, that's what we really need to see, and I'm not saying it's going to happen. That's what I'm watching for, and I'm watching for a lower time frame reversal. So again, like that means a double bottom and a big, you know, bounce off here, and I don't think this will happen until US trading, but that's what I'm looking for. Let's look at it in Bitcoin spot. And if we look at Bitcoin spot, let's take our measured move level that we need to regain and hold above is 52,800, which was the level that I was looking at as support. And we know from previous nasty pullbacks and big trends that we see really long spikes. So for me, it looks a lot like what we did here back in December 2021, where, you know, we had a massive spike. The low here, when we got underneath this daily 200 moving average, was 41,000, and we bounced to 51,000. We bounced 20%. So don't underestimate, you know, what can happen. That was one daily candle, and that was just the wick of the candle. So when I look at Bitcoin spot on the weekly, here we are at the weekly 50 moving average, which when we did this before in 2021 was really good support indicator. And when we got underneath it, it was resistance. It was resistance here again. This is one of those levels where, again, I'm not saying this is the bottom, but it is quite likely that we see a bounce. And again, the equal measured move in Bitcoin spot, 52,800. And if I put my fib retrace levels in from the low to high here, you can see on the weekly, let's tidy up a bit. You can see on the weekly, we had a really decent bounce from this 236 fib. And here we are at the 38.2 level, which is 51,400. It's also previous swing low, support, pretty good support and resistance. I think that it wouldn't be crazy that we see a little bit of a bounce here. And again, that 236 fib level that was previously support and could now become resistance is at 60,000. Wouldn't be weird here to see a bounce to 60,000. That would also be back to the weekly 20 moving average. So I'm watching it. You know, I've never seen this, you know, they always say buy when there's blood in the streets. It's very hard to do though, isn't it? When it's been such scary moves. And the only thing I can say is you have to be really careful not to do this with, you know, blood in, I think we're seeing a bigger move, but it's not going to happen too quickly if central banks step in. So especially we could see quite a spike if the Bank of Japan step in. So that's where I am in Bitcoin. So how am I looking at this? Well, I'm looking at a lower time frame. Even here, like I really like Heiken-Ashi. Most market moves are three waves. You know, sometimes they're really shallow, sometimes they're not obvious, sometimes they're inside of each other. But a higher low and holding this here and turning green and turning higher, breaking these highs, I am looking for a kind of bottoming pattern here that I would step in. At the moment, we haven't flipped. I don't think it's going to happen until US trading. Yesterday in ETH as well, let's move to ETH. I was looking at this being a very nice three-wave measured move correction. I had no idea that, thanks to Arkham Research, of course, that Jump Trading was selling so much ETH. Was it the carry trade or were they just taking profit now that the ETF has launched? I don't know. It seems very weird. They say they're getting out of market making. Now we can look back previously and see that this weekly 200 moving average has been quite interesting for ETH. It's been support, then underneath it's been resistance, and it's been support again. Then we had a nasty little fight over it, and here we are, first time sharply back at it. If we put our fib retrace levels on from this swing low, you can see that we're also at a very nice 61.8 fib level. So we can see also, if we look left, pretty good support and resistance here at 2,100 in ETH. The swing highs in April 2023, swing lows, highs again in November 2023, and then swing highs in end of the year when we got above these levels and we had a nice bottom there. So we have pulled back to weekly 200 moving average, a pretty good fib level. You can see all the other fib levels have been really well respected in ETH. If you bounce from a 61.8 trading a fib retrace level, your first target is back to the 50%. And if you get above, and so that's like your trend resistance, if you get above this, and that 50% level is 2,485. ETH is really funny about how it does big round numbers, so big round thousands. So bouncing from 2,000 to 2,500, it's quite a common thing. But because this is also 61.8 reversal is that golden ratio zone, if we're going to mess around in the middle, if we get above 2,485, we're likely to bounce back to 2,864. That's the second target. Remember, at the moment, we are not saying this is the bottom, but you know, if we look at ETH previously, if you bought ETH around this weekly 200 moving average and held above it, that wasn't a bad place to buy ETH at all. And so you just got to be really careful and make sure that this is, you know, the bottom. So again, I think that eventually this interest rate, this carry trade is going to continue to unwind and it will hit stocks. But I don't think that it will involve crypto that much, because so much of what is traded in crypto is outside of those bigger institutions. So that's where I think we go next with ETH. And I don't think, unfortunately, that the altcoins are going to bottom until we see ETH and Bitcoin bottom, you know, and Solana and so on. So it's been a pretty ugly move. But look, it's not, if you've survived it, this market gives you amazing opportunities if you can handle it. So don't give up hope. In fact, this could be a really good opportunity. Let's take a quick look at Solana and some of the others before we go. I'm not saying these levels are whole, but if we look at Solana, in this one, I had drawn an equal, really, my favorite trade setup, right? Bar none, on a pullback is a 50% retrace with an equal measure move. So if I look at where we are in Solana, let's take everything else off because these fib levels worked really well. First time back, we bounced all the way on the back to the 236 fib. We bounced all the way back almost to the highs. This 38.2 was really good support, and here we are at the 50%. So it's bounced at every other fib level. It would be weird if Solana didn't bounce it. We've also got the weekly 50 moving average in Solana here. Remember, Solana's not affected by Mt. Gox redemptions or anything else. So, really interesting support and resistance level for Solana, and this is a textbook ABC equal measured move. What do I mean by that? I mean this first swing and the second swing here are equal. Not dead equal, but pretty close. 50% levels can be pretty sharp. I actually think there's a smidge lower that we could go here. Between 102. So this for me in Solana means this is coming into a really interesting support zone. Now, remember the thing about crypto tops and bottoms, how you retest lows with a spike. So what do I mean by that? So I kind of mean exactly this, right? So quite the most common thing you see in crypto is it'll make a high and then it'll make a false break, retest to that high. Here we made a low, false swing lower, a low, false swing move underneath that level. So here we've made a low. What I wouldn't be surprised to see here in Solana is a bounce and then a retest to that low, something like that. But somewhere between 102 and this 109 level, I would be looking for Solana to bounce, and maybe it gets front run, I don't know. But what would say to me that we're going up again, because this is a 50% level, mean reverting markets tend to keep mean reverting. So what I would expect to see here when Solana bottoms is a 50% bounce. Here, let me take the support and resistance level lines off. So I think this 134, 136 level is pretty interesting resistance, but my target on this would be 50% from the high that we made in March to the low that we make here, which again might be a little bit lower. So it means that my 50% minimum target from this bounce would be 158 or around there, 158, 160. So Solana, pretty interesting level to watch. I think it could smidge a little bit lower, could overshoot. We might not even make a bottom here. We could end up with some really nasty spike swing low. And look at previous swings where lows where we have seen nasty pullbacks in Solana and how big the weekly spike lower is. You know, it can be pretty nasty. This is crypto. stay away from the leverage, and let's see, because if Solana can bounce, then a lot of those Solana meme coins could bounce too. And this, for me, is this Solana look here is this knife catch that I would be looking for. My favorite looking knife catch, let's put it that way. And that will help, again, those Solana meme coins. Just like a bounce in Bitcoin will help some of those Bitcoin stuff, and BCH, BSV, and all those long-term holders in those as well. Okay, good luck. Let me know. I'll do another update later after tonight. We'll see how we're going. I'm going to try and do it live, and let me know if there's anything you'd like me to cover.